Good afternoon, traders, and welcome back to the Hot Stocks Outlook for May 31st, 2019. Hope you all have had an excellent week out there in the financial markets, and as always, plenty to cover this week in the Hot Stocks Outlook. So we're going to start out here with shares of Abercrombie and Fitch. We've got General Motors, so automotive there, technology and Taiwan Semiconductors, Tyson, and also Bost Beer, which we've highlighted a lot of the strength in those consumer staples, but things are shifting out there in the marketplace. So taking a look starting here at Abercrombie and Fitch, we see that what we have here is the daily price action. So each one of these bars represents a full and complete trading day. And against that price action, you see that there is a black line and also a blue line. Now, the black line that you see there on the chart, that is a regular or simple moving average. We refer to it as the actual moving average. And what it does is a very common technical indicator. It just plots previous prices, adds them all together, divides by a certain number, and moves that line moving forward. But the problem with an indicator like that is it's really just informing you of where the market has been. And of course, as traders, we need to understand where the market is moving next. So what we're able to compare that value to is this blue line that you see on the chart. And for that value to be generated, VantagePoint is looking at up to 30 to 35 different markets that are known to affect, drive, and influence shares of Abercrombie. So the shares of this individual stock is going to share extremely important information with things like retail ETFs, other individual stocks within the retail space, things like the dollar index, interest rates, global stock indices. And there's some extremely valuable information that can be derived from those intermarket relationships, but you have to use the technology of neural networks, which is a type of artificial intelligence. So all of that analysis is done to generate these values ahead of time and create a predicted moving average to let us know where prices are moving going forward, which is obviously what we need to know, right? So as soon as that blue line crosses below the black line, it's informing you that average prices are expected to move lower, right? And so when we actually have that indicator, it gives us a very clear guidance of what direction do we want to be trading the market. And we can see that overall, this market has moved down tremendously, down about 37% after this big gap down that we had just the other day. Now, what's important to understand here, though, is that's not the entirety of the VantagePoint forecast here. We're also provided with extremely valuable information like the predicted neural index. So this indicator that's either green, it can move to a red, or a green and move to a red. It's a extremely accurate 48-hour indicator, so upwards of over 80% accurate. And this is over all market conditions. So through earnings reports, through Fed statements, all of this indicator is consistently over 80% accurate, forecasting those next 48-hour windows. In addition to that, you're actually provided a predicted high and low for the next trading day. So you have the trend direction, short-term strength or weakness, and also very important trading levels provided to you way ahead of time here. So you see that we hit this predicted high on that trading day. You see a lot of weakness from the neural index, signaling that this market's likely to move into a downtrend. You get your crossovers. And these are the things I really love to point out here. As you see that neural index comes up to a green configuration, and it's saying, hey, there's some strength over the next subsequent 48-hour period. But that's a great time to short up near those predicted highs, right? Anticipate that strength, but you know that that blue line or that predicted moving average is well below the black line. You see again here saying expect some strength coming into this trading day, but look what happens here, right? You get a lot of strength, you move higher, but look where the close comes in. Market comes all the way back down and closes below that predicted high level. And this gave you, numerous opportunities to go ahead and short the market well before this market moved lower. And the overall trend, obviously, very, very weak here. But, a lot of the move here, you don't have to run a huge stop loss at all to participate in a move like this. As the market, you got a predicted moving average way down here, you're shorting well above it, and the market never gets back to that level, moves down about 30%. Looking at General Motors here. So we've seen just overall a lot of weakness in the market, and we're going to get to these consumer staples here. But along with, utilities and consumer staples, we're doing, pretty well. But now everything's getting pretty weak here, and you definitely want to go ahead and be short the market. Here in General Motors, we have this crossover to the downside. The neural index is, what you want to pair with that when those crossovers come through. And you see what occurs here. Same thing, saying, okay, well, the trend is to the downside. If you're actually shorting at these predicted levels, you see in days like this where you actually come up to this previous day's level. You've traded straight down, and next day you gap right up to that level. But if you're actually setting limit orders at these levels, you're going to get filled right at the open in that day. We have another level achieved right here. Right here, one of the tough things is you got to oftentimes be shorting on bullish days and get that position on, because you see that almost immediately this thing's going to start moving lower. Again here, you'd get filled at the predicted high, get filled there, filled there, filled there, filled there, filled here. Multiple opportunities to short the market along the way. And as long as you develop a strategy where you can deal with volatility over these 48-hour windows, going to be doing quite well as you can deal with that market volatility, stick with the overall trend direction, but make sure you get that direction right? I mean, stick with these predicted moving averages. You got a 14% decline in shares of General Motors, and obviously a lot of other areas in the market are seeing this sort of decline. Here in TSM, so if you look at things like the XLK ETF, Nvidia, a lot of these shares are really getting battered here. And it's definitely a great time to come in and short. So we see, again, this crossover to the downside going all the way back to really before the month of May, saying this is not an area where you want to be long. Use your VantagePoint tools to go ahead and get short the market. So again, you're shorting here, shorting there. Plenty of opportunities along the way to add to this position, and understand that there's only one direction here that you can be trading, and that's to the short side. And you see how these tools really work out, where you've got this crossover to the downside, but the neural index is telling you, hey, expect this strength to come in, but the blue line is still below the black line. That's actually a great opportunity to short. Don't get shaken out by the volatility, and make the most of these sort of opportunities that we're seeing out in the marketplace. So again, market down over 15%. And previous hot stocks outlooks really over the past several weeks been highlighting that it's time to hedge that portfolio. It's time to go ahead and actually get short the market, buy some put options, and get some protection. And there's very few places to hide. One of those places that were doing quite well were the consumer staples and also utilities. And that has even shifted. So it's seeming that there's really no place to hide from market weakness currently. And we see here that with Tyson Foods, we've covered this extensively over this run up, but great opportunities all along the way to be buying up shares of Tyson Foods. But you want to know when to go ahead and take those profits and move on to something else. And you see just over and over, I mean, these predicted lows getting hit immediately, the market moving in your favor, but things radically shifted pretty much after this trading day here. So go ahead, go back to those predicted moving averages, and it's saying, no, you're done. Get out of the way. This is no longer the market that you want to go ahead and participate in. So a great rally to the upside, but to preserve that 28% rally with numerous addition points along the way, you got to understand that take those profits, get out of the way, and don't sit around for this huge red candle that we have here on the chart as things start to move lower. Boston Beer, another one of these examples where consumer staples, things like J.M. Smucker, Tyson here, I mean, just those grocery store stocks doing very well. But things are shifting, and we actually forecast for things like the ETFs, and you just see all of this weakness coming through really all of the sectors of the market, and there's just no reason to be long in these areas. But on the way up, great opportunities to be adding to the position, but then realizing, look, this is over, get out of the way, and actually I believe you'd be shorting from that level right there. We can go ahead and bring those predicted moving averages back in. You get these crossovers to the downside, and you're coming in and reversing your position. And you see the market off already 5% as shares decline, and just a tremendous amount of weakness as you see the separation between these predicted averages getting wider and wider, neural index showing no sign of strength in the market. So, it's been a really great ride during this year. We had 4 months of pretty much straight uptrend. Crude oil did well, but we're seeing as crude oil reversed, so did the energy stocks, and then it seems that the S&P is following crude oil. And you see we had that 6% move lower, the other day in crude oil last week. Well, you really got to watch out for these stocks because there's not really any places to go ahead and look to push long positions. And you're really looking to give back a lot of profits if you're not getting out of the way, but there's tremendous opportunities to make money to the downside here by shorting the market, buying some put options, and really being ahead of a lot of this weakness and markets and entire sectors really starting to turn here. So have a great rest of the week. Thank you all for watching the Hot Stocks Outlook. Have a great week. Thanks again. And of course, bye for now. This has once again been our Hot Stocks Outlook for May 31st, 2019. Have a great week, guys.